Matt will be back with us next week. We're looking forward to having Matt back, and hope all is well. Matt, Gregg, this is our 20-something episode of MX This Week in Lumber on the MX Broadcasting Network. Welcome back. Uh,
Thank you.
you bet. You bet. A quick update. We had our materials exchange meeting. We're currently having that right now. We are about up to 14 people now in operations, tech, logistics, sales. So we are growing. Exciting. Went from 5 people last year, 4 or 5 people, to almost 14 or 15 now. It's a great, exciting deal. So looking forward to really providing a platform that's going to grow with all of our users and grow at a pretty exponential rate. Just real quick on the platform today, we've got a special that the mill is only giving us on some Doug Fir premium 4-square cars, 104 and 5/8 and 92 and 5/8. We just sold one car, 92 and 5/8 into the Midwest at $350. You should come on the platform or call us to see what that goes everywhere in the United States. I don't think that many bids will be turned down on that one. So, Gregg, let's real quick go into talking about the market a little bit. Housing starts. What's your update on that?
So housing starts came out this morning. Hey, Ashley, again, congratulations to everybody at MX for growing the team. It is really exciting. Housing starts came out this morning, and the headline was that they fell. I kind of dug into it and really looked at the numbers I came up with was year to date starts are up 21.8%, single family up 27.2%, and permits up even more than that, up 26% year to date. If I look at the graph of, kind of the last 3-4 years, what I see is after pretty flatlining with modest growth from, 16, 17, 18, we had the downward spike on COVID and then the sharp upward, and we're really kind of returning to trend line. I always look for, what's the silver lining, and authorizations. That's houses that are permitted but not started. Single family is up 56% from a year ago. So, we've got a robust pipeline.
So where's some of the down that's all positive stuff. What's the other side of the coin in housing right now? Where are we? Do you know what we are 3 months on an average, or where was it actually down?
Yeah, well, I can tell you the actual starts fell from June to July. Where's my number? Actual starts fell from June to July, I believe 6%. Is that the right number? Yeah, 6%. And I think that the constraints on building, material shortages, supply chain, labor, etc., are acting as kind of a modulating effect.
Yeah, I got to agree with that. I was on a call the other day, Gregg, and they said a lot of contractors. This yard I was talking to said, and this is multiple people said, this is the first time their contractors came in and said, "Hey, I bought my lumber package a lot cheaper somewhere else, right? But yet they're getting higher prices on doors, windows, engineered stuff like that. So the overall package still is kind of relatively high when everything's taken its term in the microeconomic microburst box, right? And what it really means, housing's crazy, right? So existing homes, they're selling without contingencies or walkthroughs or open houses, right? And they're still doing that, even in our area. New homes, the builders, I think, have said, you know what, we could keep putting new homes in the market farther out in the cycle and we'd sell them, but we're backing off a little bit and completing what we currently have. So things are still really good, but they're like, why should we go out and sell a house for 6 months out when we're not sure how fast we can build the ones that we are just putting under roof now? And I think you alluded to that last week before we cut out in that Wall Street Journal article that came out. Does that make sense?
Yeah, and the other thing is that there's more builders are building houses that they haven't sold, so that they can know what the market is for a completed house that's ready to go. which is probably pretty smart because it gives them a much better, they're going to know when, hey, we've got houses that are available that, we can't sell, or we can sell at, X dollars. It's
For
going to give
sure.
them a lot better market feedback.
Let's go over to the poll that you put out on LinkedIn, which is really becoming a true test for the market, a true standard to see where the market's at. Talk to us a little bit about this and what you pulled out of it.
And we talked about this a few weeks ago when we were together, and I think I made the comment that, and at the time, I think futures was in the 600s, and cash was in the 500s,
Yeah,
right?
we were talking about how big the basis was.
Right,
Yeah,
exactly.
yeah.
And you can see here, 30% of the market thought the market had bottomed out. It's et cetera, et cetera. And I think my comment at the time was based on the fact that 81% of the market does not think it can go below 400, that puts it in play. And here we are 3 weeks later, midweek print at $400. Voila. I mean, I think you probably can buy 2x4s under $400 today. I do want to talk about basis some more, Bash.
Well, I was going to say it was interesting. Also, 3 weeks ago, all the news articles were coming out, and people were getting quoted saying how it's a new normal this time, and we're all going to run right back up, and everybody should buy inventory. And like nobody ever knows, and I think it's dangerous. And I put something out over LinkedIn this weekend. Make sure you know when somebody is quoting something or putting a statistic out that you verify that statistic. You follow that chain to see where that rumor or thing came from and find out if the person putting that out is long or short on a net basis. Because I really see a lot of disinformation out there, which nobody deserves to have. And with the power of social media, the internet, and connections, you can really trace back to find out and ask people if they put something out. Are you long or short, right? And
right. Well, because we're all the product of our position in the marketplace.
Yep. Yes.
I mean, it's just human nature. And it's hard to divorce yourself of that. I mean, if you're in and you've got a big inventory position, then by default you're gonna find everything positive. I'm a perfect example of that. I mean,
but you always say when we're talking, you're always like, I bought this or I sold this and I could be wrong or I did this, but at least it's almost like when you go on CNBC and you say, disclaimer, I own this stock, right?
Yeah, right,
but it
right,
seems
right,
like
right.
we're more willy-nilly and freewheeling in this lumber space that anybody can come on and say, I think the new normal is $800 $1,000 for the next 10 years because I feel that way. And it's like, wow, okay. Because things are different this time. So I'm just saying I like the way that you bring it to the market of, yeah, you say what you're doing. So go ahead. One other thing you want to talk about?
In line with that, I sold some futures this morning against some inventory because I keep looking at the basis being as advantageous as it ever is.
Yeah.
You're looking today, and September futures are currently 480. You had a print of $400, and you've got some items that are trading undervalued to 2x4s. It's almost it's in that category of it's too good to be true, which really has me uncomfortable right now. I mean, can you see how? I mean,
yeah.
Am I showing uncomfortability? Because I have it. I'm very uncomfortable.
Because the history shows to realize that basis move, you got to go through some speed bumps first.
Exactly.
Yeah. No worries. So yeah, no, that's great on that on the poll there. So you and I have been talking. We had breakfast last week too. Inventory feedback I'm getting from people all over is I'm just finally working through some high price stuff, and I'm taking the loss. And for people that are doing that, they're not the only ones in that camp. The reason we ran to $1,700 more on the cash market is everybody was on the other side of the boat. This is the result of it back to the other side, right?
Yep. Yeah, and I mean, I've been using the analogy of the market has a severe hangover. I mean, it was a wild party the first half of the year, and I mean, we all were we all were drunk, stoned, and then some on what
Microdosing.
would uh, yeah. And I think that we all got, our heads were, we were just skewed by the craziness of the numbers. And the markets come back to earth. I think that there's a lot of work that's going to need to be done over the next, I'm going to say, 60 days. Because if we think about it, where we are right now, seasonally, typically the market's pretty good here through through Labor Day
Yeah.
and September expiration. But the two worst weeks of the year are the last 2 weeks in September.
Yeah, I remember
And
that. Is that for spruce or for all lumber?
I mean, it's spruce, give or take. Like other things, kind of like get caught up in it. I don't
Yeah.
have the data on whether that's true for every other species or not. But my point is, in 7 out of 10 years, the market low is the third week in October. So you're saying we got a few weeks, and then we're kind of in seasonally the weakest time of the year, right?
Yes. Yep. Yep. No doubt. No doubt about
It's
that. I mean,
going to be interesting to see how that plays out.
so markets, what I'm seeing is just got off the phone with two people. You may be able to fill this in a little bit. They were telling me how the docks are stacked to the rafters or whatever. There's no rafters stacked to as high as they can get with Eurowood sitting on the docks. Is this true?
Um, I haven't been to a port to look at it,
Yeah.
but I have heard the same reports. Yes.
Yeah. And
I've heard the same reports.
yeah, I've
Mm-hmm.
heard it from. So you can trace the information back. I've heard it from people that use it, sell it, buy it, that there's a lot sitting there. Now, I don't know if that's because people haven't chose to take their hits on it, if it isn't priced yet, or if it is sold and going to ship. But I know that when it sits in a port, it's expensive to sit there after 30 days. So if it's loading up, I always think it's because the price is high and people haven't gotten to turn it over yet.
Yeah, I mean, I don't think you don't go through a market falling 70 to 75% in 12 weeks without having a lot of lumber that's poorly priced.
Yeah,
And I think, I mean, we all have that in, whether you're end users, right? So end users typically have the prices are a little stickier, right? There's
for
a lot
sure.
of builder yards that are able to continue to pass on higher prices to their customers.
Yeah.
The distribution chain, we have to react much quicker to what the
No,
spot market
no,
is.
no doubt.
And
OSB is a perfect example. I took some
yep,
of the guys down in the office here to a big home center the other day to show them lumber, and we looked at OSB. It was trading at $32 a sheet, right? On the wholesale market,
right.
it's a no bid, or there are some people moving, and it's like $15 or lower a sheet, right? So that's a big discrepancy, but it's getting worked through on the wholesale mill side. It's probably a little bit slower to come through that side, but it's so which it shows me is it's still in flux moving. We just talked about Euro lumber, Pacific Northwest. Matt's not here, unfortunately. He'd be really good feedback. Those mills seem to be doing a good job moving lumber. The spruce mills seem to be a good job moving lumber. How about on the east side, Greg? You usually are a pretty good indicator of what's going on there. What's the feeling on the eastern mills?
It's a struggle. I mean, guys are. I mean, put it this way: there is better liquidity, but the challenge that the market has is that you've got a lot of players not participating. So, for mill
Good point.
sales or distribution, the key is finding, okay, who are the guys that are in the market, because it's not that broad right now. We had a period, I don't know, a couple of weeks, a week, 2, 3 weeks ago, where we were very, very active with multifamily business getting placed. And
Yeah.
that kind of seems to have run its course, at least that whole batch of it. But we're missing market participants, which lead to not as deep and not as liquid markets as we need.
Yeah, I noticed that on the MX exchange. We've got a lot of the different participants in now buying, a lot more people selling, and a lot of the other ones that have been involved somehow in this consolidation must be getting the call from higher up to not buy at some points, right? Or they're just working through stuff. But yeah, I've seen some big people not in, also not participating,
Right, right.
which means what happens when they do and when do they have to, right? Who is your daddy and what does he do?
Well, I'm looking forward to seeing Matt back next week, Ash.
Yeah, for sure, Greg.
I
Any
think we're at
final
our.
thoughts?
Uh I mean, I guess my final thoughts is, I'll go back to, classic quote, and it's one day this war will be over.
Yeah, no doubt, no doubt about it, Greg. So hey, everybody, thanks for showing up. Come to mxlumber.com if you want to get a hold of Greg. He's at Sitka USA. You can find him on LinkedIn. Send him a direct message. His email's on there also. We'll look forward to Matt Lehman tomorrow at noon Central. And we'll go over the Lehman report and talk a little bit about Southern Pine. But until then, come to the mxlumber.com, and we'll look forward to having you on some more shows.
Thanks, Ash.